stockmarketsnow.com and co-founder is Mr. Shiva. Stockmarketsnow.com is purely an educative platform and is developed mainly to educate the aspirants of stock markets right from the basic level. We strongly believe that investment in the knowledge is the best investment in the world. In this webinar, I am going to cover the basics of stock markets right from the basic level. So friends, please stay connected till the end. The reason why you should visit our website is there you will get market at glance. That is, whatever activities has taken place in the market, you will get everything in one page only. And if you follow that, it will be very useful for you to plan your trades for the next trading day. Apart from that, every weekend we are providing a stock analysis where we are doing that how you can analyze a stock based on fundamental and technical aspects. Apart from that, we are writing some blogs regarding the trading psychology, do's and don'ts of trading, trading mindset, how to start your career in stock markets, etc. And friends, not only this, a lot of knowledgeable stuff will be added in the upcoming future. So friends, now I am going to show you the pictures of some famous personality, and at the end I will show you, I will tell you rather why I have selected those personalities, right? Let's start. Now friends, who is this personality? He is our cricketing legend, Mr. Sachin, right? Who is he? He is one of the best ODI cricketers of all time, isn't it? Mr. Virat. And who is this guy? We don't know anything about him, right? We can say that he is simply a duplicate of Virat Kohli, isn't it? So the friends, why I am showing you all these images, like all these pictures of famous personalities, Virat, Sachin. See, what I mean to say is that Sachin has always respected Mr. Don Bradman, but he has never tried to copy him. He has his own way of playing cricket, isn't it? Even Virat has followed Sachin, but he has his unique style of playing, isn't it? So friends, why I am telling you is, what I am going to tell you is that never ever try to copy the big legends who are there in the stock markets, like Rakesh Jhunjhunwala, Radhakishan Damani. So many legends are there, friends. Because see, if you want to create a portfolio by looking at their portfolio, you will be trapped. Trapped in that sense means, see, we don't know what is their capital allocation, we don't know what is their risk appetite, we don't know what is their position sizing, we don't know at what time they have entered, isn't it? So keeping all these factors in mind, friends, I always recommend you to please try to develop your own process and create a portfolio depending upon your risk appetite, okay? Not depending upon your risk management, depending upon your position sizing, okay? But don't ever try to copy any of the legends. I'm not telling that not to follow them. You follow them, but don't try to copy, right, friends? Now, friends, these two are one of the biggest stock market legends ever, okay? So who is the person in the left hand side is Mr. Rakesh Jhunjhunwala, isn't it? So you know, friends, he has started his career from only 5,000 rupees, and now he is having a net worth of more than 20,000 crores. How is that possible, isn't it? See friends, so many of us has a misconception that if I want to trade in the market, if I want to earn some money in the market, I should have huge capital. Then only I can sustain. Okay, it is right up to some extent, but the main thing is your knowledge. Okay, see here the only thing which you have to keep on focusing and is learning, learning, and learning. If you don't focus on knowledge, obviously you will be out of the market, right? And friends, do you know who is he? He is the godfather of stock markets across the globe. He is none other than Mr. Warren Buffett. Do you know one thing, friends? Till day, okay, can you guess his age? He is around 88 or 90 years of age. But till today, he reads a book which consists of 500 pages. So do you think that is that necessary at his age? See, why Warren Buffett has performed consistently well across the years is that he always tried to keep on enhancing in knowledge. Okay, because he strongly believes that before investing in stock markets, one should invest in knowledge. Then only he can prosper in stock markets. Okay, friends. So hope you are getting what I am going to say. Okay. Now the thing is, why stock markets, right? See, so before coming into the stock markets, you should think carefully that there are different asset classes. Then why I should enter only stock markets, right? See, the first thing is your capital appreciation. See, friends, here in stock markets, you can start with as less as even 100 rupees also. Okay. Say, for example, today I have bought some XYZ company shares for 10 lakh rupees. And if they are fundamentally good stocks and I have like filtered the stocks based on technical analysis, there is a high probability that it will give me multiple returns in the future. Isn't it? So the first reason is the capital appreciation. Next is it beats out inflation. Inflation is what? Inflation is rise in prices. Okay, so this equity class is the best asset class which beats out inflation. Because friends, say for example, if today if you purchase some product for 100 rupees, okay, definitely after 1 year you have to pay at least 105 rupees to purchase the same product, isn't it? Because the prices are rising. So that's why I'm telling you stock markets is the best asset class which beats out the inflation. Next thing is its liquidity. It means it is highly liquid in nature. It is as liquid as cash. Okay, how? Say for example, friends, if I am staying in a flat which costs around 50 lakhs, okay, and tomorrow if I need, say for example, 10 lakhs, so how can I get it? Even though if I am having a net worth of 50 lakhs, but immediately I can't arrange 10 lakhs, isn't it? I can't sell a part of my flat to get 10 lakhs, isn't it? What I have to do? I have to sell my entire flat. For that, I have to reach to marketing agencies, advertisements, brokers, then only my flat will be sold, and that too it will take at least 1 month of time, isn't it? Even if I go for a loan, then also it will take around 15 to 20 days, isn't it? So it is not at all liquid. Same thing, friends, if I have 50 lakhs in my trading account and tomorrow if I need 10 lakhs, what I will do is simply with the click of a button, I will sell the stocks which are having a net worth of 10 lakh rupees. So that by the evening, those 10 lakh rupees will be credited to my bank account. So it's as liquid as cash. And final thing is, friends, dividend income. Dividend means, see, today if I purchase a plot for 10 lakhs, say for example after 10 to 15 years the prices rose from 10 to say 30 lakhs. So my profit is how much? 20 lakhs. Apart from 20 lakhs I am not getting anything, isn't it? But in stock market, friends, if you invest in good dividend giving companies, then apart from capital appreciation, every year you will get at least 2 to 3% as an additional income. For example, your capital appreciation is 12%, for example, and your dividend income is 3%. So finally, at the end of the year, you are able to generate minimum 15%, which is too good return, friends. Okay. So, and there are a lot of like advantages, friends, if you come to the stock markets, right? So, but the thing is, you should know how to select the stocks, okay, which we will discuss in the upcoming slides. Okay, friends. Now, let's understand the difference between the returns of various asset classes over a period of time. So, friends, here you can see that there are different asset classes like equities, real estate, gold, PF, and FD. And if you see the data of the past 20 years, you can see that equities class has given the more returns than any of the other asset class. Isn't it, friends? If you see FD, it has given only like 7.87%. But when you compare it with equities, it's almost double of that, right? Now, since we have seen the returns, friends, the next concept which I am going to discuss is about the real return. Okay, this is the most important factor, friends. Doesn't matter wherever you invest, but you should know how to calculate your real return. So let's understand it. What is a real return? So real return is the defined return, which is nothing but the promised or fixed return minus inflation minus tax. Now, let's understand this with the help of an example. Say, as per present scenario, the bank FD is 6.5%. Inflation is 3.21%. And tax slabs, it depends on your earnings, like 10%, 20%, or 30%. Say, for example, if you have invested 1 lakh in FD for 1 year, your defined return is 6,500. So 90% of the people will think that, okay, after 1 year I will get 6,500. But this 6,500 is not the actual return. Okay, because here you have to consider inflation as well as tax. Now, as per present scenario, the inflation will be 320 rupees. And say, for example, you are in 10% slab. That means 6,500 into 10% is 650. So let's see how much is the real return. So real return is 6,500 minus 320 minus 650, which comes to around 5,530 rupees. So friends, you can see that straight away 1,000 rupees will be deducted from your defined returns, isn't it? Which comes to around 5.53% only. So do you think, friends, that 5.5% is a very good return in the long term? So it depends upon your risk-taking capacities, right? Now let's understand some another concept which is called as Rule 72. So what is Rule 72? Rule 72 is you have to divide 72 by R. So if you divide 72 by R, you will get how many years your amount will be doubled. That means number of years it will take to double your amount. Let's understand this with example. Say you have invested in any asset class and you are able to generate 8% returns. So how much time it will take to double your income, to double your investments? 72 by 8, that means 9 years. If you generate 6%, it will take 12 years. And if you generate 15%, it will take almost 4.8 years. So friends, higher the return on investment, lesser the time it will take to double your investments. Right, friends? Now let's understand the most important concept in stock markets, which is called as the eighth wonder of the world. You know which is the eighth wonder of the world? The eighth wonder of the world is CAGR, which is compounded annual growth rate. Right, friends? So what is a CAGR? CAGR means how much returns we are able to generate over a period of time. Okay, and the returns will be compounded annually. Let's understand. Confused, friends? Okay, not an issue. Let's understand this with the help of an example. Say for example, in first year you have invested 1 lakh and you are able to generate 15% ROI, means return on investment. So your return on rupees will be 15,000. At the end of end year, 1 year, you will be having 1 lakh 15,000. If you continue like this, okay, by generating the same returns, you at the end of second year you will get 1,32,250. And if it goes like this, and at the end of 5 years you can see that you will generate a profit of more than 1 lakh, isn't it? That means at the end of first year you are having 1.15 lakhs on an investment of 1 lakh. Now you are having a total of 2 lakh rupees. So friends, that is the excellent benefit of CAGR. So friends, if you want to enjoy the benefits of CAGR, start early. And remember one thing, here time is money. The sooner you start, the better results you will get. Okay, and not only that, you have to stay invested for the longer period of time. Right friends? So start early and stay long. Okay, now friends, see, everybody is having a different risk appetite. Okay, so there is a concept called as risk return trade-off. Okay, what is the risk return trade-off? Say friends, say for example, if I am 30 years of age, okay, so my risk appetite will be different as my capital will be different. Somebody, if he is 60 years of age and if he is a pensioner, his risk appetite will be different. Okay, so depending on person to person, there will be different risk categories. Now let's understand this. See, risk is directly proportional to return. Okay, that means if you invest in low risk financial products, you will get low returns, and if you invest in high risk financial products, you will get high return. See, high risk doesn't mean that I am telling you to go to casino or do gambling. I am telling means high risk means it should be done with the help of proper technical and fundamental analysis. Okay, high risk doesn't mean that invest blindly. High risk means invest systematically by properly like doing technical and fundamental analysis. Let's see the different products and the returns, okay, based on their risk profile. So short-term investments are having a very low risk, okay. Then comes bonds, then comes stocks. In stocks also there are different categories. Say for example, most of the times if you invest in large cap companies, the returns will be less. In mid caps, return will be a little bit higher, but risk is little bit high. And if you invest in small caps, there is further risk. And if your risk is increasing, obviously returns will also increase. Okay. And not only that, you can invest in some international stocks also, like Facebook, Amazon, etc. Okay, so everything depends upon your risk appetite and your capital allocation, friends. Okay, so see, now the thing is how to create a portfolio. It should consist of only large caps or mid caps or small caps. Confused how to create a portfolio. So friends, in our upcoming webinars, okay, I will teach you how to create a portfolio. Since friends, now we have understood the different concepts like what is real return, what is rule 72, what is CAGR. Now let's focus on the main topic, that is what is a stock market. Right? So what is a stock market? A stock market is a bridge, okay, between whom? Between investors as well as companies. That is, the public or the institutions which are having excess money will invest in the corporates or companies or government institutions who needs money. And you can invest in stock markets either through primary market, which is called IPOs, or through secondary market, which is called as a equities market, right? So you can invest in the stock markets either through IPOs or through equities. Okay. Now there are some exchanges, friends, okay, which you should be aware of. In India, there are three major exchanges, national exchanges. Okay, what are they? First is BSE, which is nothing but Bombay Stock Exchange. It is the oldest one. Okay. Next is NSE, which is National Stock Exchange, and final is MCX. MCX is Multi Commodities Exchange. See, these two deals with equities class, and this deals with commodities class. See, commodities means some people are there who trade in commodities, okay, like gold, silver, aluminum, copper, zinc. So such transactions will take place with the help of MCX. Now let's see some global exchanges. This first one is NYSE, that is New York Stock Exchange, Nasdaq. These two belongs from US markets. This is Japanese index. Okay, this is European next. This is London Stock Exchange, Canadian Exchange, Deutsche Börse Group, and so many friends. Okay, so like these are some of the major exchanges in the world. Now, since we have seen what are the major exchanges, let's understand what are the type of companies which are there for us in the market. Okay, and understand it with the help of a market cap. Generally, friends, in stock markets there are three types of companies, and the companies are classified depending upon the market cap. Okay, so what is a market cap? Market cap, simply it means the value of a company in the stock market. That means what is the total net worth of the company, right? So based on it, it is classified into three types. First one is large caps, next mid caps, and final is small caps. Large caps means which are having a net worth or value of more than 20,000 crores. What are the companies? Reliance Industries Limited, TCS, HDFC Bank, Hindustan Unilever. See friends, simply you can remember like this, that they are the giants in their respective fields. Okay. Next comes mid caps. Mid caps means which are having a net worth of 500 crores to 20,000 crores. Examples are Bata India, Muthoot Finance, Sun TV, BHGL, and so many. And small caps means which are having a net worth of less than 500 crores. Examples are TV18 Broadcast, Polycab, NCC, Just Dial, and so many. Okay, friends. So you have to create your portfolio depending upon this three type of companies and depending upon your risk return trade-off. Okay. Now we have to understand who are the different types of participants in the stock markets. Okay, who are the different participants? In the previous slides, we have discussed what are the types of companies, but here we will discuss who are the participants who will invest in those companies. Okay, the first one is the regulator of stock markets, that is, you can say that it's the police department of stock markets. Okay, like what? Like SEBI. Okay, SEBI is Securities Exchange Board of India. Next is the depositories. Who are depositories? Depositories means they help the like they held our securities in the electronic form. Okay, they will held our securities in the electronic form. Right now in India there are two types of there are only two depositories. They are NSDL and CDSL. Okay, Next, exchanges. Exchanges we have already discussed, like BSC, NSC, and MCX. Next is brokers. See, friends, even if we have hundreds and thousands of crores of rupees, stock market will not allow us to invest directly into the companies. There has to be an intermediary. So who is that intermediary? Broker. That means brokers are the ones who provide us the platform so that we can buy and sell our securities in the stock exchanges. Okay? In the stock markets. Examples are Sher Khan, Kagri, Zerodha, and many more. Next are investors. Investors means like retail investors like you and me. Okay? Normal public, individuals. Morgan Stanley, there he is FII, that means foreign institutional investor. It's an asset management company, BlackRock. And finally, the government of India. Okay? So friends, if you see after the shareholding patterns of different PSBs or PSUs, you can see that 51% of the shares is held by government of India, right? So these are all the participants who invest in stock markets. Now the next important thing is, what are the type of account we should have if we want to start our trading career? Okay. The first one is bank account. Next is trading account, and finally is your demat account. So what we will do with the help of bank account? Simply we will deposit cash, we will withdraw cash, we will transfer cash. Okay. With the help of trading account, we can buy the shares, we can sell the shares, we can deposit funds through the bank account as well as we can withdraw funds. And finally demat, once we buy the shares, it will be holded in the electronic form in our demat account. And if you want to transfer that shares to another demat account, it is also possible if you are having this account. Okay. Now let's see and let's understand the basic concept how the transaction will go on. For example, first of all, you will deposit cash in the bank account. From there, your funds will be transferred to trading account, and from trading account you will purchase some shares, okay, which will be credited to your demat account after T+2 trading days. Okay. Similarly, if you want to sell the shares, what will happen? You can sell it with the help of a trading account, and once you sell it, amount will be credited to your trading account, and then you can transfer it to your bank account. So this is the whole mechanism, friends, how a simple transaction goes on between a bank account, between a trading account as well as a demat account. Now the thing is how you can choose a broker. See friends, in markets there are two types of brokers only. The first one is a full-time broker and next is a discount broker. Only understand this basic difference, that is, a full-time broker is the one who will give you suggestions on like how to buy, when to buy, what are the stocks you should buy for investments, and which stocks you should buy for intraday purpose or positional purpose. Simply he will suggest you, okay, how to do your transactions and how to buy or sell your shares. But discount broker will not give you any suggestions. He will just provide you the platform with the help of which you can buy or sell your securities. There are different types, like examples of full-time brokers like Sheikh Khan, Carby, Angel Broking, Kotak Securities, and HDFC Securities, and many more are there, friends. The discount brokers, Zerodha, SAS Online, Upstox, Trader Genie are all examples of discount brokers. Okay, but the thing is, see, we have understood the difference, right? What is the difference between a full-time broker and a discount broker? But now the thing is how to select your broker. There are some criteria. First thing is the broker should be registered with SEBI, that is Securities Exchange Board of India. Next is the broker charges should be very transparent. Okay, there should not be any other hidden charges, and if there are any hidden charges, you should be aware of that. Okay. Next is the trading platform is the broker is providing, friends. Okay, see, in the world of technology today, each and every single person is using different devices. Somebody are using Apple phones, somebody are using tabs, some are Android phones, Windows, so many things. Okay, PCs, desktops. So the important thing is the platform is the broker is providing us should be compatible. That means it should be very user friendly in all the devices which are available in the market. Okay. Next is, see, this is also an important factor, that is the process through which we can transfer or withdraw funds from our bank account to trading account or vice versa. Okay, if the broker provides you any some complicated process to buy or like to transfer your funds, then you should avoid such type of brokers. Okay, the process should be very simple to deposit as well as withdraw your funds. Okay, and the most important thing is the post sale services. See friends, everybody will give an excellent pre-sale services because they have to sell their product, isn't it? What matters is the post sale services, how the customer care is behaving with you. Are they prompt in solving your problems, your issues? Okay, so post sale services is the most important thing when you are going to select your brokers. So friends, based on all the important factors, we are happy to announce you that we have partnered with the number one discount broker of our country, which is Zerodha. So friends, if you are not having any trading account, then what you can do is you can visit our website www.stockmarketsnow.com. Okay, there you will get a link. Just click on that and you will be able to create your trading account. Okay, and then also if you are having any problems, then you can reach us. Okay, the contacts numbers of our team as well as of mine is given at the end of this PPT. Okay, now friends, now we have understood what are the different criteria based on which we can select a broker. Now let's understand how to invest in stock markets. I have already told you friends that you can invest in stock market through two ways. The first one is through IPO and the second one is through equities. Okay. Now let's understand this IPO concept with the help of a recent example. Okay. Recently, IRCTC has launched its application, like launched its IPO. So what are the things which we have to consider? The first thing which we have to consider is what is the issue price. That is issue price means it is the minimum price which we have to pay. And what is the market lot? The market lot is 40 shares. That means if you purchase one lot, it will consist of 40 shares. Okay. Not only this, you have to keep in mind that from when you can start your subscriptions or from when the bid offer opens. Okay, so here you can see the bid opens on 30th September and it closes on 3rd October. Okay, so let's assume friends that we all have applied for the IRCTC. See, some thousands and thousands and crores of people will apply for IRCTC IPO, isn't it? But the thing is, everybody will not be allotted, right? So, the persons who are not allotted the IPO, to them what will happen? Amount will be refunded when on October 10th. And the persons who are allotted IPOs, then what will happen is the shares will be credited to their demat account on 11th October. And finally on 14th October, IPO will be listed in stock market. Right friends?
Praveen, I have a doubt.
Yeah, tell me.
So why IPO need to come into the existence?
Sorry.
IPO?
Yeah, see, why IPO? See, first thing what you have to remember is it is the first time only when IPOs are listed in the market. Previous track we don't have any track of IPOs in, okay, because see, whatever information we can have with the help of that application or by visiting their website, okay, but we don't have any previous track record because they are listed first time in the market through IPOs. So my strong suggestion is, friends, as per my experience, I am telling you that, and even the history suggests that also, that only 5% of the times IPOs have generated a good return. Most of the times IPOs haven't worked well at all. Okay? So if you're damn sure about the particular company, then only go for IPO. Otherwise, there are more than 3,000 companies in the market, friends. You can invest there also. Okay, so it depends upon you. But before investing into the IPOs, have a full knowledge about a particular company. Okay, we will have only the fundamental part if you invest in IPOs, but we don't have any technical knowledge because I mean sorry technical history. Okay, now friends, if you want to go for IPO, minimum lot which you can purchase is 1 and maximum is 15. That means minimum you can spend up to 12,800 and maximum is 19,000 sorry 1 lakh 92,000. Okay, so these are the basic things which you have to consider, friends. Okay, now the thing is how to invest in or how to apply for IPO. There are two ways. First thing is you can apply with the help of a UPI ID or your broker, or you can apply for IPO through ASBA. That means application supported by bank accounts. First understand how you can do this with the help of UPI. What you have to do is you have to create your UPI ID, okay, with your personal bank account. Everywhere you can find it, friends. Say today everybody is using Google Pay, Phone Pay, Paytm. So there you will get your UPI ID. Once it's generated, what you have to do is you have to log into your trading account. Next, you have to select the IPO tab, then select the IPO company and click submit. Okay, as simple as that. But when it comes to investment through ASBA, what you have to do is you have to log into your internet banking first, and internet banking is must, friends. Okay, if you want to invest through banks. Next, select DMAT and ASBA application. Next, fill in the all the basic details, IPO details. Click submit button. Okay, and once you click on submit button, your amount will be blocked for IPOs, and that amount will only be deducted when shares are allotted to you. If it's not allotted, automatically it will be refunded. Okay, friends. Now let's understand this right with the help of practical example. Okay, here I am explaining with the help of Zerodha account. So log into your Zerodha account, click on portfolio, select IPO. Okay, once you select IPO, all the companies which are going to be listed through IPOs, details will be there. Say for example, if I want to invest in Wonder, okay, click on bid, then select your UPI ID. Okay, once you select UPI ID and click submit, here next page will be opened where you have to give all your details. Like say for example, I want to purchase one lot. One lot means 1600 quantities. Okay, at the cutoff price. Cutoff price means at this price only 72 I want to purchase. No, if I want to purchase for like 70, so here you can add give 70 rupees as a price. Okay, If I want to purchase say 2 lots, here the market lot is, you can see 19. You have to select the quantity as 38. Okay, see, since the market lot is 19, the quantities will be like 19, 38, 57, 76, 95 and so on. Okay, you can't select 35 as your quantity because it has to be in multiples of your lot size. Okay, finally click on the undertaking and submit. Once you submit, your amount will be blocked and the mandate will be sent to your bank account. So this is the way how you can invest with the help of UPI. Now let's understand how you can apply it through net banking. So this is the SBI platform, friends. Okay, once you open your net banking, here option will be there, manage IPO applicant. Okay, once you click on that, enter all the basic details like your applicant name, your PAN number, client ID, everything. Okay, next is click on demat and as per services. Once you click on that, page will be displayed and here you have to click on the IPO. Okay, then click on the radio button of the IPO for which you want to apply. Click go, and finally you have to enter the details like what is the price, how much is the quantity you want to apply for. But remember friends, quantity should always be in multiples of lot size. If lot size is 40, your quantity should be 40, 80, 120, 160, 200 like that. Okay, and finally click on submit. Right? So these are the ways through which you can invest in IPOs by using UPI or net banking. Now let's understand how to invest in secondaries market, which is nothing but the stock market. Okay, now first log into your trading account. Next, transfer funds from your bank account to trading account. But friends, you should always maintain some funds in your account. Okay, don't make it zero. Select the company in which you want to invest and finally select buy option and click submit. Let's understand this. Again, we are using Zerodha platform here. If you want to purchase Yes Bank, click on that. Pop-up will be opened. Here you have to give the number of quantities, price, finally buy. And if the order is executed, amount will be debited from your account and shares will be allotted to you. Okay, friends. Now, this is the most important slide of our entire presentation, friends. That is how to select a company or how to select a stock. Okay, so for that there are two types of analysis, friends. First is your fundamental analysis and next is technical analysis. See, if you ask me that, Praveen, which is important, fundamentals or technicals, I can't tell you a proper reason, because if you ask me for who is more important, like left eye or right eye, I don't have an answer. If you ask me which is more important, your father or mother, I don't have any answer, because both are equally important. Here, similarly here also, both the aspects are equally important, like fundamentals and technicals. Let's understand what is a fundamental analysis. With the help of fundamental analysis, we will be able to know about the history of the company. Okay, what are the products the company is offering or which type of services they are providing, and right now what is its demand and future prospects. Okay, next, who are the people who are working as a CEO or a CFO or a company secretary in that particular company. Okay, next, how the company has performed over a period of time. Everything you will get it if you study the company financial ratios, if you study companies balance sheets, isn't it? There you will get each and every information how the company has performed in the past. Next, who are the promoters? Okay, that is, this is nothing but the shareholding pattern. Who are the promoters? Okay, what is their percentage ratio? Okay, who are their partners? Who are the competitors? Say for example, if I take Tata Motors, so Tata Motors under which sector? Automobile sector. So under automobile sector, is Tata Motors the only product available? No, there are different competitors like Maruti Suzuki, Mahindra and Mahindra, Escorts, so many other things. So they are the competitors. So if you study fundamental analysis, you will get, you will understand all this. Not only that, you will get what are the future business plans of the company. Okay, what is its mission? What is its vision? How the company is going to diversify its products? Everything you will get through fundamental analysis. Okay, now understand what is a technical analysis. So technical analysis is what? It is the study of past price action to anticipate the future price trends. Okay, technical analysis is the study of past price action to anticipate future price trends. Okay, so here you will get how the company, how the price movements took place in the past. Okay, so there are some different candlestick patterns. If you read me business business magazines, or if you hear this CNBC or Z Business, there you will see that analysts mostly talk about doji has formed, or a bullish engulfing pattern is there, or a hammer has formed. What are those? What are nothing? Those are nothing but the candlestick patterns. Next, you can analyze that they were sometimes they were talking about like double top has formed, triple bottom has we have seen a triple bottom type of pattern. Okay, ascending triangle is there. Oh no, there is a descending triangle, a flag pattern. So what are all those they are talking about? They are nothing but the chart patterns. Okay, next there are some concept called as an indicator. Like, so indicators like RSI, MACD, volumes, Bollinger Bands, and so many indicators. See, indicators means it will tell you about the behavior of the stock movement. Okay, behavior of the stock movement means either it is in overbought position or it is in oversold position. How many people has bought that particular share? How many traders or investor has sold that particular shares? Okay, so indicators are nothing but they will indicate you about the price movements. Okay, and there are, see friends, if you are in stock markets, always remember that trend is very important because trend is your friend. Okay, you should know when the market is in uptrend, when the market is in downtrend, and when the market is in sideways. Okay, and there is no fourth trend, friends. Okay, so if you are in technical analysis, you always try to develop a habit of first identifying the trend of the market. Okay, and the final one is the SR levels, which is the very basic of technical analysis, which is nothing but support and resistance levels. Okay, so based on all those things, friends, like different data points, you have to select a stock. And remember one thing, based on single parameter. Okay, let's understand single parameter means take any financial ratio like debt equity ratio or PE ratio. So based on debt equity or PE ratio, you can't enter into a stock. Okay, or if I enter into a stock based on only RSI, no, not at all, because You can't enter into a stock based on single parameter only. You have to combine all the different aspects. Okay, then only you can select the stocks for investment purpose. Okay, for trading purpose, technicals are is only important, but for investment purpose, fundamentals and technicals both are very important, friends. Okay, so don't commit this mistake that based on only single product, single data point, you enter into a stock. Okay, now let's understand what is a candlestick. Okay, if you see a graph, friends, here you can see that there are some like green color bars, some red color bars. What are those? Isn't it? So if you zoom in, you can understand that the candles will be like this. See, you can see a green body, green color candle and a red color candle. See, green color candles are those where buyers have dominated the market. See, there are only two types of people, right? One is buyer and another one is seller. So when buyer is dominating the market, the candles will be in green. And when the sellers are dominating the market, the candles will be in red. Okay, and there are two parts in every candle, which is called as a body as well as a shadow. See, this is a shadow or tick, whatever you can call it. Okay, and this is a body. So these are shadows and these are bodies. And there are four types of prices in candle. What are those? Opening price, closing price, days low and days high. Here also same, opening price, closing price, days high and days low. Okay. Now, see, the thing is, why it's green? Okay, buyers have dominated. Okay, but the one more thing is, the close of that candle is near to the high. That's why it's a green candle, friends. That's why buyers have dominated. And here, if you can observe, the close of the candle is near the day's low. Okay, that means sellers have dominated the market and the candle is red in color. Okay, now the most important concept or the basic concept which each and every person should know if you are in stock markets, which is the power of support and resistance. So what is a support and what is a resistance? Support means, resistance means it occurs where an uptrend is expected to pause temporarily due to concentration of supply. And support occurs whenever a downtrend is expected to pause due to concentration of demand. Confused, friends? What are these technical terms? Oh, I have to mug up. No, nothing to worry. In layman terms, I am telling you, support means simply where buying pressure is more. That means buyers are more than sellers in support area. And resistance means sellers are more than buyers and seller strength is more in the resistance area. Let's understand this. See, these two lines are called as support and resistance lines. And if you see at support levels, you can see that here the buyer strength is more. And if buyer strength is more, then sellers, what they will do? They will push the prices up. And when it hits the resistance level, here the seller's pressure is more, selling pressure is more. They will pull the prices down. Again here buying pressure is more, they will pull the prices up. And here the selling pressure is more, again the price will come down. Okay, friends, so support means simply where buyers are more than sellers, and resistance means it's an area where sellers are more than buyers and the selling pressure is more. Let's understand this with a live example, recent live example, friends. Is the screen visible, friends?
Yes.
Okay, thank you. So, friends, I have opened like Bharti Airtel chart. Okay, so you can see that let's start from here. This is a support level, right? So, where is the support? It is at 335 levels. Okay, that means whenever the stock comes to 335 levels, the buyers are more, and what they are doing, they are pushing the prices up. See, whenever the price is hitting the 335 levels, since the buyer strength is more, they are pushing the prices up. And at resistance level, which is around 360 levels, the selling pressure is more. Okay, and as sellers are more here, they are pushing the prices down. Again at 330 levels or 335 levels, buying pressure is more, the price is moving up, and it goes on like this. See, it goes on like this. That means you can see that from the past 6 months, Airtel is trading in a range, isn't it? And once it's break this resistance level, okay, the price moves up, right? And once this break this resistance level, friends, then it becomes a support, and next level will become a resistance. That is, this zone is called as a flip zone. That means where support becomes resistance and resistance becomes support. Now, this is a flip zone. Why? Here, the the resistance has become a support now, and hit this area, and this area is your resistance level, and selling pressure is more. Again, the prices came down. But again, when it hit this level, again up. So simply, friends, you have to identify the areas where buyers pressure is more and the areas where sellers pressure is more. Okay, and if you are able to identify these levels, 70% of your task is completed in technical analysis. Okay, so please try to find support and resistance levels. Okay, practice hard, practice well. Now friends, let's come to our PPT. Now, see friends, I am not talking only about the positives. Okay, you should know also the negatives of the stock market. Okay, see, positives and negatives are what? Positive means something which is multiplying my money or multiplying my capital, giving multiple returns to my investments. Okay, that are positives for me. And negatives, which has eroded my money. Okay, so there are two things, friends. First thing is wealth destroyer. Okay, let's see first example, some of the examples like Yes Bank, DHFL, Reliance, like Reliance means Anil Dhirubhai Ambani Group, Reliance Power, Reliance Infra, Reliance Communication, PC Jewelers, Infibeam, Tata Motors, up to some extent, and many more. So, see, if you invest in such companies, your capital has eroded like anything, right? Almost you have lost like 80%, 90%, even 95% also, isn't it? What's the main reason? Who are the culprits? Who are the people we have to blame? It's you or me only, friends. Isn't it? Who has told us to, or who has told you to invest in such companies when there are excellent 500 to 1000 excellent good companies? Instead of investing in wealth destroyers, if you invest in wealth makers like Bajaj Finance, HDFC AMC, Nestle India, Abbott India, Godrej Properties, InfoEdge, which is nothing but Naukri.com, they have given multifold returns. Okay, they have given multifold returns. If you invest in such companies, your 1 lakh has become 10 lakh in no time. So it's completely depend on us, friends. See, even in normal life also, there is good people and there is bad people. Everywhere it's present, good and bad. So we have to identify. where to invest, where not to invest. So for that, you have to develop your technical as well as fundamental skills. Okay, because if you want to sustain in market, think that stock market is both science and art. You have to develop both the aspects. Okay, friends. So always try to identify good companies, because if you invest in wealth makers, even when you sleep now, your money will work for you. Now, friends, I hope that this last you have given your precious time till now, and I hope that it has added a bit to your knowledge, right, friends? And I'm assuming that it is been fruitful to you by attending this webinar. Now, the thing is, what is my upcoming webinar is all about? Okay. So the webinar will be like, I have covered fundamental as well as the technical aspects. Okay. In fundamental aspects, I am going to cover about the primary and secondary market, about time value of money, about top down and bottom up approach, about the various types of markets like equities, commodities, derivatives, forex. I will give you a briefing about all that. I will make you aware about the common terms which are used in day-to-day life of stock markets, like who is a SEBI, who is a broker, DP, NSDL, CD, SL, what is a bull market, what is a bear market, okay, who are buyers, who are sellers, what is a market depth, everything I will cover, okay, basic terms. Then, see, this industry is going like anything nowadays. Okay, if you see the like 5 years back, people don't know what is a mutual fund. At least now we are aware that okay, mutual fund is a product where we can invest. So I will tell you in brief that what is a mutual fund, what are its type, and which types of funds you should select to invest. Okay. Next, there are different theories in market, friends, but at least you should follow these three theories: cancelling, Pestel, and SWOT analysis. For each and every stock, whatever you select, okay, minimum these theories you have to follow. These are from fundamental analysis, friends, okay, and financial ratios, of course, I will cover like ROCE, ROE, okay, what are leverage ratios, okay, how to read a balance sheet, what are the important aspects of balance sheet, how to read an annual report, okay, what is the most important aspect of annual report, everything I will cover in fundamental analysis. Next is the technical analysis. Here I will cover the price action techniques. See, friends, price action is the heart of technical analysis. Even if you don't know anything, even if you know only price action, okay, then it's really you can cover most of the things in price action. Here I will cover SR levels, how to draw a trend line, how to draw channels, what are swings, okay, what are the psychological levels, okay, what are the different types of chart patterns like head and shoulder, double top, double bottom, ascending and descending triangles. See, there are hundreds of candlestick patterns, okay. If you use all the candlestick patterns now, you will be confused, okay. So I will explain you about the 8 major candlestick patterns which you can see every day in your charts, okay. Next is, see, even there are hundreds and hundreds of indicators, but I will explain you about the most commonly used indicators which are used across the globe. They are RSI, moving average, ADX, Bollinger Bands, MACD, and VWAP. See, friends, final thing, whatever you study, okay, from wherever you study, remember one thing, that your analytical skill is only 20%. What is important is your risk management, okay, which constitute 80%. Okay, analysis is only 20%, friends. Everything depends upon your risk management. So I will teach you how to do your proper risk management with the help of stop loss hunting. Okay, in risk management, I will cover what should be the appropriate capital, what should be your risk reward ratio, and what should be your position sizing. Okay, now let's come to course details. The mode of teaching will be online, friends, so that everybody can attend this throughout the country or across the globe. Duration of the course will be 15 business days, friends. Okay, that is from Monday to Friday. Timings, it can be from 8 to 9 or 7 to 8, depending upon the feasibility. Okay, and the fees of the course will be, friends, it will be 9,999. Okay, and if you think that okay, if you pay 9,999, what is the support? The support which we are providing is, see, if you go to any like online sites, you will get lakhs and lakhs of books. Okay, but the thing is which books to follow. So here we will provide you ebooks which were across 10,000 rupees free of cost, and those will be the excellent books. And we will create a separate Telegram group, friends. It will be a premier group where all your queries will be solved. Okay. Now comes the major surprise. The surprise is you have to pay once and you can enroll twice, friends. That is, if any of you miss some class, any of the class in first batch, okay, then you can continue in the next batch also. Okay, you can continue in the next batch also, and you can attend all the 15 classes, friends, and we will not charge you a single rupee also. Okay, I hope this type of feature you will not see in any of the trading courses or training courses, because I can understand, friends, that maybe if you attend first time, it will be difficult for you to understand since it's a very new concept, right? But at least if you attend twice, then you will get a clarity about what to do and what not to do, friends. Okay, so you can connect with us through these numbers. Okay, we will be available 24/7. You can reach us through Facebook, through Insta, through Telegram, and through Twitter also, friends. Okay, so finally I would like to conclude this webinar with the help of this famous quote by Mr. Legendary Warren Buffett is, the best investment you can make is an investment in yourself. The more you learn, the more you will learn. Okay, so friends, don't run after the profit and losses, run after the process, because if you follow the right process, automatically money will follow you, and if you follow after money, definitely your capital will be eroded sooner or later. If you invest without any knowledge, then sorry to say that you are in wrong place. Thank you, friends, and have a happy weekend. Happy investing. Bye bye. Take care.